In a week of historic national upheaval, the economy showed promising signs of strength. That's why stock prices have dropped but not plunged. Americans opened their wallets in July, boosting retail sales 0.6%. July's retail sales increase was the largest of 2017. The Atlanta Fed bumped up its real-time GDP growth estimate for the third quarter from 3.7% to an extremely strong 3.8%. Household debt has grown, but household assets have grown faster. Rising household net worth sparks the wealth effect, and people feel freer to spend. Sales at auto dealerships, by far the largest segment of retail sales, grew by 5.5%. Non-store retailers, another big retail segment that is dominated by Amazon, posted their best monthly sales figures of 2017. Department stores posted their best sales figures in 6 months, breathing some life into a retail segment that has been shrinking for years. Coming out of 2008, after the worst recession since the 1920s, household debt shrank. Since mid-2013, household debt has climbed back to the level reached before the Great Recession, reflecting Americans' confidence in their ability to spend. This key metric suggests consumers are likely to continue to spend more. It's the Fed's financial obligations ratio, household debt as a percentage of household income. Consumer debt has been near an historic low for over 5 years. The American household's ability to pay its expenses has shown unusual and consistent strength. Since consumer spending accounts for 69% of U.S. growth, this bodes well for the future of the economy. Stock prices have soared for months in a new leg of the 8-year bull market, which began after the election of President Trump. Amid the historic national conversation last week, as the direction of the U.S. was debated, the Standard & Poor's 500 stock index, a barometer of America's promise, suffered its second consecutive weekly decline, closing at 2425.55. After a week that tested the nation, the stock market loss was less than 1%. Friday's close was only about 2.5% below the all-time high reached just 11 days earlier. Political uncertainty, the nuclear standoff with North Korea, or a totally unexpected event could trigger a 10 or 15% drop in stock prices at any time. However, the economy is not showing signs of weakness, and a recession and bear market are not on the horizon. In fact, the latest figures for fundamental economic factors driving growth, consumer spending, income, and corporate earnings, suggested that stock prices could be driven higher and that this 98-month expansion could continue. We are independent financial professionals, a trusted source for news and analysis about wealth management, broadcasting at a frequency attuned to you. Subscribe to our email newsletter to see our videos on your smartphone at any time.